Hey, wagwan people, Crypto Yard representing. Let's jump into this one. As today we are talking about Volatility Protocol and what this basically is. If you know about the VIX index, which measures the volatility or the fluctuation of prices when it comes to the S&P 500, then you'll get what this is about. This is the crypto version of that. And as it's saying here, guys, Volatility Protocol is DeFi's home for composable volatility. We create volatility models for popular DeFi protocols and publish real-time volatility indices for leading crypto assets. So you can see they'll be working with many of the DeFi protocols such as UMA, Sushi, Uniswap, Balancer, Aave, and Polygon. They haven't started working on all of them yet. I mean, they are doing it currently with UMA. And let's just do an example of what it is. So if you was to say you wanted to long, and the thing is, guys, as I had mentioned about the VIX index for the S&P 500, they do this over a 30-day period. For this one, they will be measuring the volatility over a 7-day period. So guys, for example, if you wanted to go long when it comes to ETH, you'd be using, this is the example here, you'd be using a $800 US. You'll be able to see that you'll be able to purchase one vol ETH, which is their token, their long token, because they got a separate token, which is a short token called the iVol ETH, which is the I stands for inverse, which means you'll be going short. So let's say you was to put $800 in. For each vol ETH, you'll be paying $108, and after a 7-day period, you'll be able to redeem that according to what the volatility was. So you'd see that this 800 will give you 7.3 vol ETH, and as I said, after 7 days you'll be able to redeem that. And I would say if it was to completely go up, then obviously, let's say this was to go to 120, I guess you'll be getting $12 per $100 that you spend. So what's that, like $96 if it was to go your way. So let's go to the frequently asked questions to get a bit more familiar with what this is. So it says Volatility Protocol publishes real-time index feeds that track the volatility of various types of crypto assets. Our feeds are composable, meaning they can easily be extended with other decentralized protocols like UMA and Balancer to make crypto volatility tradable. And here's telling you what it offers, and currently they're doing ETH and BTC, and as they've said, they'll be doing so for many of the other major cryptocurrencies. So right here they're asking, are your feeds fully decentralized? And they're saying yes and no. So the reason why they're saying this is because currently they're taking their data from Deribit and OKX, and this is because currently there isn't a robust enough DeFi protocol that they can use which is immune to manipulations, but they're saying that when there is, then they will go fully decentralized as well. But currently they're using Deribit and OKX. They're telling you currently that the main pools for trading these tokens are hosted by Sushi, where everyone participating in the pool will earn multiple rewards, such as Vol plus Sushi plus Matic as soon as L2 trading and Polygon is released. So they haven't done that yet, but they're looking to do it. I mean, we should also show that currently they're still going on their IDO, I guess you could call it. But this IDO is different, and this is the MISO, this is on the Sushi Swap. But you can see that this is completely different, as it's making the participants decide the IDO price, whereas a lot of other projects, they set a price for the IDO, but for this one, the market is setting this price. And you can see that they've got, what, 750,000 to go? Well, that's how much tokens they must be selling, and you can see that 246 ETH is already in here. And how this works is that this 246, they'll do the average. Well, basically you take this 246 ETH, multiply it by dollars, by the value of the ETH dollar, and then divide it by this amount. And currently, if you was to do that, I think you'd be getting like 80 cents or 78 cents per vol token. So if you want to go and do this, I think you've got what, another 12 or so hours to go, guys. So yeah, this is what I should tell you also that their tokenomics, they got what, I think it's 150 million tokens, guys, if I'm not mistaken, and 60% of that will be going to the community, whether it's for rewards or other such things. Get me? But yeah, this one is looking very interesting, and I'm referring to it as the crypto VIX index. All right, people, I'll probably do another video again just to brush up on what's happening here. But it's Crypto Yard representing, and we are out here. Zimmy, boom.